Hello traders, Gary Wagner here, just about 10:20 in Honolulu, 4:20 in New York. It is Wednesday, July 6th, 2016, and we are looking at the Dow Jones Industrial Average, which has settled roughly 20 minutes ago after being down for the morning part of the session, closing about 0.5% higher, 17,918. Nice recovery on the day. Standard & Poor's also trading higher, up about 0.5%, 2094, putting it up about 11.25 points. Low today, 2065, and the high, 2094.50. So you can see we're just a half a tick off the high, and we've come up substantially about 30 points from the intraday low that was registered today. So traders, the topic for today on today's trending markets has got to be the British pound. British pound once again succumbing to some real pressure. When we looked at it last, the trade rate was roughly 132 to the US dollar. Right now it's more like 129 to the US dollar. Trading off today about 0.75%, about 97 points lower. It's still currently trading and currently active. I really had to pull up a monthly chart, yes, a monthly chart to kind of show you the different areas that we're looking at. Of course, you've got tremendous technical areas of support at around 140. And that, of course, was based upon activity that came in, this being just after 2000, this being what, about 1993, and of course, maybe 2007, this being 2010 here. Since 2007, of course, we have not seen a British pound under any kind of pressure that took it below this price point. Now, we're looking at a vast data array, meaning we're looking at a market on a monthly chart that goes back to 1985, 1980 in this area. So a lot of data in there. And there's only been one other occasion when the market dropped. And when it did drop, it dropped from about 2.4, in other words, almost $2.50 per British pound, to almost parity. Parity comes in right in here. That's dollar for pound, and it really ceased at about 105. Now, we had the euro dollar, which began roughly at parity with the US dollar, and that's now way out of that. So what are we looking at? Well, as I spoke about the other day, my belief is that, and this is obviously a multi-year move because the whole Brexit thing is going to take a couple of years to unwind. But traders, think of it this way. What if, in fact, we see this market not find support in this particular price point, and then on a technical basis, we're really in no man's land because the market has not been at this price point since 1985. That's a considerable amount of time. But what if the British pound went back to parity with the US dollar? I think that that's actually possible. And so what we're going to be looking at, whether it's through option plays or futures plays, but I do believe that there is more downside room in the British pound, and over the last half of this year, 2016, I believe that that could be one of the most dynamic plays out there, and it really warrants some real serious attention. So traders, what about U.S. equities? Of course, we did have a nice recovery, currently trading up about 10 points, 2093 in the S&Ps. But again, we're really close to these record tops. We're absolutely above our 200-day as well as our 50-day moving average. So on a technical basis, it looks pretty strong. However, excuse me, this is a 100. I'll have to switch that back out. But this 200-day moving average, and we are above our 50-day moving average, by the way. But with the jobs report set for Friday, I really would be on hold in terms of where we think this market could go to, because I believe it will be highly fundamentally driven based upon what the results are of the jobs report. So let's see how the market reacts. And obviously, a weaker than expected jobs report could signal some real potential pressure on this market. And we'll have to put it in what I call a wait-and-see attitude. As I said at the beginning of the show, what I'm really drawn to over these last couple of days is the British pound. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another Trending Markets. Bye-bye.